CentraFX. In this video, guys, I'm going to be showing you one of my favorite institutional reference points, which is the breaker block. I'm going to be showing you how I practically use this for trade entries. This is something I've been using for a while now. I've backtested, I've used it, I use it almost every day to take my trade entry. So I've mastered it and it has worked for me almost every time. So let's before we dive into if you have not subscribed, I want you to subscribe to this channel. I also want you to hit the like, turn on the notification so you can be notified whenever we post valuable content like this. So let's talk about the definition of breaker block. A breaker block is simply an order block that has been violated, an order block that has been breached, and that is simply what a breaker block is. So whenever your order block fails, you know that that order block that failed becomes a breaker block. So I'm going to try to be fast as possible because I don't want this video to be too long. So let's dive into, let me draw a diagram so I can explain to you what breaker block simply means. So if you can see on this diagram here, you can see there was a move to the upside, price moved to the upside and it retraced back, and then price reacted from here and it broke this previous higher high here. So this is a break of structure to the upside. So now we have gotten a confirmation that price wants to continue to the upside. So what we simply means that we mark out this place that created this high. So this becomes our order block. So we expect price to come down here normally, and then this is where the smart money left their orders. So price is supposed to return back here and activate more pending orders before going up and breaking another structure to the upside. This is actually what we are looking for when price breaks a structure to the upside. So but unfortunately, when price came down to this order block here, that order block was not able to hold. So price did something like this. Price breached this order block here and then it sold. So now when this kind of thing happen, we cannot control the market. We can only predict. So when something like this happen, you don't have to be panic. So you don't have to panic. So price will always come and retrace back to the previous order block, which is now called a breaker block. So have this at the back of your mind. Whenever your order block is broken, it becomes a breaker block. So now price will now have to return and retrace back to the previous order block before selling, something like this. So this is typically what a breaker block is. So let's look at the other way around. Let's say you want to price did a break of structure to the downside, which gives us sell model. So let's do something like this. Okay, let's say price did something like this, and then price came here, and then price broke structure here. So normally we expect price to come to the order block that broke this structure here, to come here, and then sell again. But unfortunately, okay, so this is the order block. This is where your order block is. This is where your order block is. Yeah, somewhere around here. And then this was the break of structure. So when price broke this structure here, so we have the impression that price want to sell So price broke this structure here and price retraced back to the order block. So we normally we're supposed to sell from here, and but you can see price came to that order block. It was not able to hold and price breached the order block. So normally we expect price to retrace back to the order block that was broken, which is now a breaker block, and then before buying rather. So I want you to have this at the back of your mind, that whenever your order block is violated, it becomes a breaker block. So every order block that was violated, price will always retrace back and mitigate the orders and before going to either buying or selling. So I'm going to show you guys a practical example on a live chart. So let's dive into that. Okay, a quick one. So you can see here price did a break of structure here. So price traced back. So normally we expect price to retrace back to somewhere around the order block before selling again, because price did a break of structure here. But instead what price did was that price got to that place and price violated the order block and it went up, and you can see that price now retraced back to the previous order block, which is now considered as a breaker block. Price begin to go up. It's going to see it's going up. So that's an example. So let me show you another one from the charts. You can I've trained my eyes to be able to spot these moves in the market. So it's something that you need to back test. After this video, just go back to your chart and do a lot of back testing, so you can be able to spot this move anytime you see them on the live chart. So let me show you more on the chart. I mark them out because of this video. Okay, so you can see another one here. Let me not use that. Because it's not every time that it doesn't play out 100% of the time. So you need to notice that there's nothing that is 100% in trading. So that is why we always use risk management. But majority of the time, this always plays out, and so you can add this strategy to your arsenal. So you can be using them to take your trade entry. So you can see here on this chart that price did a break of structure here. See, price did a break of structure here, boom, and we expect price to come to our order block here before buying and taking out this nearest draw of liquidity here. So instead price breach the order block here. We broke it. So what we see here is that price actually retraced back to that order block that was violated, which is now considered as a breaker block. Sorry. So you can see how immediately price got to that zone. So you can see how price started to sell. So if I want to take my trade entry, I want to switch to my 15 minutes and my 5 minutes, so I can see I can get a sniper entry. So you always set your stop loss like above the order block, and you can see how price sold massively after this break of structure. Normally if price does a break of structure, it's supposed to return back to the last bearish candle that created this break of structure. That is considered as your order block. So you can see this order block meets all the criteria because there is a fair value gap there. So price supposed to come back and do a market structure shift somewhere around here, something like this, like this. Boom. Then some before violating this high here. So this is what we expected to happen here, but that was not the case. So price breached it. This now becomes a breaker block, and price return back to it, and you can see what happened there. So there are so many in the chart. There are so many. Let me see if I can show you some more, so you can go back to them. So you can see what price did here again. Price did a break of structure here. So we are expecting price to go up, but price came back and breached the other block that created this break of structure. So you can see how price retraced back to it, and boom, you can see how it sold. So same thing, it happens almost every time in the chart, almost every time. So you can see retrace back and boom. Let me show you other examples. It happens on every pair. This is the Euro USD. Let me show you DBP USD also. Okay, you can see what price did here. Price did a break of structure here. Boom. So price did a break of structure here. Yes, yeah. It did here. So normally we are supposed to be bullish, but you can see price return back to the other block. It was not able to hold, so here becomes a breaker block, and price return back to the breaker block, and it sold. You can see how it sold. So you would have made a very good profit. So if this one here was actually violated, and let's say it hits your stop loss, you are still going to make back your money when price retrace back to it. All you just need to go is to go down to the lower time frame and look for a market structure shift, then you take your trade to minimize your loss. So you can go through your chart, do a lot of back testing, and you are going to see this occurs every single time in the market. It occurs every single time in the market. So I'm also going to be making another video of what mitigation block is. So you are going to see the difference between mitigation block and the other block. So I want you to actually go back to the chart and do your back testing, and make sure you actually meet your financial advisor before you take any financial decision. um, so if you are yet to subscribe, I want you to subscribe to our YouTube channel, so because we post valuable content like this almost every time. So also turn on your notification so you can be notified whenever we post any content like this. And make sure you do your back testing on this, and you are going to see how this thing plays out every single time in the market. I think let me see, US 30. So you can see what happened right here. You can see price doing a break of structure, and price retrace back to the other block that created this break of structure. So this is the other block here, and so we expect price to react from here and continue going up, but instead it was violated. So this becomes a breaker block, and you can see our price retrace back to the breaker block, and you can see how it's sold. So it happens on every asset. You can use this on crypto, you can use this on the financial market, you can use it on any assets. It applies to every single asset. You can use it, you can, if you spot it on a 1 hour time frame, then you switch to a lower time frame like the 15 minutes, and then take your entry at on the 5 minutes. So this happens almost every time in the chart. uh, um that's going to be all for this section. So I'm going to see you guys again. Once again, you're welcome to CentraFX. So if you have stayed up to this time, you are a step closer to become a profitable trader. I want you to turn on your notification, hit the like, and make sure you subscribe so you can be notified whenever we post valuable content like this. And you can also join our Telegram channel where we post trade ideas and trade setup every single day. Every single day we post market insights, so you can, it's totally free, you can join, and you can also get experience from there. um that will be all for now. So bye, and see you next time.